Okay, so I'm going to teach you what liquidity is. And essentially what it is, it's just where people's orders would be. And the key thing to liquidity is you just think about, support and resistance when you first started off trading. Just basic highs and lows. Like you'd put your stop here, wouldn't you? And you'd put like your stop here because you thought like, let's say you think that, oh, if price comes here, it's going to bounce up. Because that's what you first learned, right? Support and resistance. And essentially liquidity is just turning that on its head. Just think like where would people actually have their orders? And you might not believe it, but a lot of large like hedge funds and stuff, they actually use support and resistance. I know it might sound crazy, like you hear about like smart money and all that, but a lot of them they use support and resistance on the higher time frames. So that's key as well. So make sure you write that down. On the higher the time frame is, the more important the liquidity is. Because I I don't know about you guys, but I used to look at highs and lows on like let's say the 5 minute chart, and it'd be completely like wrong. Do you know what I mean? Because it's not noise on the 5 minute chart, but it's because every single candle like it has a very like specific purpose. But I'm telling you, man, like, if you're if you're a day trader, you want to use like the 15 minute at least, at a minimum, because the highs and lows there are more like important. But let's go back to the 4 hours. If you go on the 4 hour, large funds at a minimum, like they execute their orders on the 4 hour chart, and they usually use the daily and weekly for their analysis. So with liquidity, you want to know where the most important liquidity is. And to determine where the most important liquidity is, you look at a minimum the 4 hour chart. And I've just done the 4 hour chart because it's easier. And then your goal essentially is, like, to determine bias is where are we most likely to go? Are we most likely to go up or down? What high or low are we most likely to take? That's the key with trading. That's all you really need to do is just predict what highs or lows are we going to go for, right? So let's just play a bit more of the candlesticks here, right? At this point, it should be clear to everybody that we're going straight for these lows, right? It should be clear to everyone that we're going straight to these lows. People have put their orders here. They've gone long, right? Once they've seen this price action. A lot of large funds think that euro is going to keep going up. They probably think it's going to go to, like 1.01 or whatever up there. So they've put their stop losses here. So it should be clear to us as traders that clearly we're going to go for these lows. Do you know what I mean? So if you're a day trader, you're only going to look for shorts. The highest probability is going short. You don't want to go long here. So let's play some price action here. Now this here is so key. This is what confuses a lot of people. You see how we go to this support, and you see how we have a minor little retracement. That is key because what that happens, what that confirms to people, is that oh look, this support is actually valid. So people start buying here, and they put a lot of stops there. Now those stops are liquidity, so it builds up more liquidity. So yeah, some people call this like inducement and stuff, getting people in, but I don't know. I don't really think of it like that. But what you want to look for is on this retracement up, are these order blocks. So this down close, this up close candle, is an order block or a supply zone, whatever you want to call it. When we're bearish, price will go up to these levels and it will respect it. So this is key. So let's see what happens. There, look. You see like you see how we go straight into this order block here. As soon as we go into it, we smash right down. And I'll make it a bit more clearer for you. So this is the order block here. Let's go on the hourly chart actually. See that? Look, this is the order block on the 4 hour chart here. You see how we go straight into it and then we go straight down. Like that can be a trade setup right there, right? Because you're bearish. The going to the order block is the extra confirmation. Once you see this rejection here, that's such a strong rejection. So let me go on the 15-minute chart. Let's say you were day trading. There are opportunities in this as it's going down. You can even go in the 5 minute if you want to. And then you want to look at time. Look, we do this. We do the run to the order block during London. This is London session. And then during New York, which is like 7 till about 10ish, we go straight down. Like how crazy is that? So let's go back on the 4 hour chart. So you remember that key liquidity that we had? Let's play it a bit more. Let's see where we're gonna go. Because now that we've gone to the order block, this is allowed what people call smart money. Smart money are just essentially people who trade like you. Like don't think like too much into it. It's just some people, some funds trade, some banks trade like we do. Not all banks though. That's key. Not all banks trade like us. So yeah, Now we're going to go for these lows, right? It must be very clear to everyone. We've gone to these order blocks, and now we're going straight down for these lows, because that's where the liquidity actually is. So let's play a bit more. There, boom, look at that, straight through. So in terms of like, let's say you're a day trader, because I'm more of a swing trader, so for me, because I'm quite good at liquidity, I would be taking this entry here. That's my sort of entry. My stop would be, sorry, my entry would be up here. This is an optimal trade entry, by the way. You can find lots of videos on YouTube. And then I always target a 3-to-1 because I'm looking for these lows. But I like to have my take profit just before, because you see how we do things like this? We go right next to it and then we retrace. I'd rather just take the 3R. But yeah, that's because I'm a swing trader. I used to be a day trader, but I just think it's a lot easier to be a swing trader at this point. But let's say you're a day trader, right? And let's say you're on the charts at this time. You can see how clear it is we're going to go for these lows. So you're only looking for shorts. So let's see, there's an entry on the 15 minutes. So look at this, right? At this time here, it's London. We've just had Asia and we've gone up, and there's a gap here. So because I use the optimal trade entry, which is literally just a Fibonacci retracement, that would be my entry there during London. A nice easy setup, and then you can get a 3-to-1 again. This is the highest probability setups that you can get, when you use liquidity. So make sure you aim for things like this. Now you can enter on any pattern you want. I just use the 15-minute when I'm day trading, but you can use order blocks, fair value gaps, anything. Like look here, there's another good setup here. Like if you might just miss this out with spread. People enter here, people enter on the order block. Like this could be your setup here. Let's use this one here. So your setup could be the order block, and then you can just target the liquidity for a 2-to-1. Easy bread and butter setup. I would have took this setup to be honest, but I would have just missed it because I like to enter there. But yeah, that's how you use liquidity. At its most basic form, it's just highs and lows, right? And to determine the bias, all you need to ask yourself is, are we most likely to take out highs or lows? That's it. And if you can't determine that, don't trade that asset or that pair. Find something else to trade. I'm telling you, that will save you so much pain and agony in the long run. Only focus on pairs where it's so obvious where it's going to go. This is why I don't think you should just trade. Let's say you just trade euro. If you're at like this point here, it's just chopping around. Like, what's the point in that? Like, trade. You want to have like a watch list of currencies, right, that you trade, and then you can pick the best setups possible. That's just my opinion, but yeah, that's how you trade liquidity. You want to look for key highs and lows. And this is a bearish example, but when you're bullish, you literally just reverse it. It's as simple as that. Let's see if there's a quick example here. So like, at this point here, you have a little bit of a retracement, and then you go up, and then you take these highs out. Right? At this point here, because remember this is the 4-hour chart, at this point here, it's so obvious as we're going up where we're going to go to. Do you know what I mean? Like, it's so obvious we're going to go there. So that's how you use liquidity to determine bias. And yeah, make sure you're using liquidity because that is the highest probability setups.